Here we go, folks. Getting ready in 3, 2, 1. And here we are. Welcome to Be the Boss of Your Money. This is my live stream, all about personal finance, investing, the stock market, interest rates, the economy, borrowing, saving, budgeting, you name it, we cover it here. I'm Mitch Goldberg, the host of this show, Be the Boss of Your Money. I love doing this. I love teaching, and I love sharing the lessons that I've learned after of being a financial advisor for over 30 years and counting. I run the show every Monday through Thursday at 4:30 p.m. Your time is valuable, so I greatly appreciate your spending some of it with me. Today, the big news, we have a lot of big news. This is just a big news week, but I think the biggest news is actually the Robinhood IPO. And I know a lot of professionals out there are going to say, oh, we shouldn't even pay attention to it. Don't talk about it so much. Don't put so much emphasis on it. I beg to differ, and I'll tell you why. We know the impact that Robinhood and the Robinhood clients, the Robinhood Army, hashtag Robinhood Army, has had on the market with meme stocks, options, stock options, crypto. So we need to just quickly get into what I see as the very poor demand for the IPO mean for the market, and does this somehow signal maybe a top for the most speculative frenzy that we've ever seen in the stock market? Coupled with aftermarket trading, Amazon, big miss on revenues, not such a great forward-looking guidance, stock tanks and aftermarket trading. And I'm going to show you a bunch of ETFs that I think it's going to take down with it tomorrow. So let's get started. This is going to be a good show, and we've got the usual market update and market wrap. So 1, 2, 3, let me find the intro. And if you have any questions, of course, please ask them in the comments. If you're watching the replay, welcome to you as well. Here we go. We are back. So nice to see all of you. We've got a few people out there. Just want to put this up here. Hi, Mitch. Hey, Rhonda. Thank you so much for joining me. Great to see you, and I really appreciate you taking the time. Are you a new viewer for the show? I haven't seen your name up there before, so I really appreciate you joining us. Josh, hey, buddy. Hey, Josh, am I going to see you tomorrow morning at our networking group's meeting? I hope so. You always make me smile. We always have a good time when we get together. So I hope to see you tomorrow. All right. If you're just joining us now, I'm Mitch Goldberg. You're watching Be the Boss of Your Money. We're talking about Robinhood. We're talking about the big Amazon miss. If you haven't heard by now, Amazon, the last of the huge NASDAQ stocks to report its earnings. Pretty big miss. The stock is down dramatically in after-market trading. Okay, so we're going to get into this stuff. I've got a few people out there. So while you're watching, please don't hesitate to give us a like, a thumbs up. I'd really appreciate it. Yes, Josh, see you in the AM, and Rhonda, not new. Thank you, Rhonda. I really appreciate it. I hope I didn't insult you by asking you if you're new around here. I do appreciate it, and I do my best to, remember everybody, and certainly you. And I'm so glad you're a part of this community. That, by the way, is the best part of doing this. Eventually, you start to feel like you're building a community. Like it's like just going to a place that you enjoy going to, just knowing that you're going to run into a few friends. You don't even have to make any plans. You just know you're going to run into friends, and it's just the best. Thank you, Josh and Rhonda Cooper. So let's take a look at a couple of things. Why is Robinhood so important? So let's take a look. We're going to share the screen. We're going to cut right to the chase. Okay, put myself up here. IPO today at 38, and it closed at 34. That's a pretty big drop for an IPO. You know, when you hear about IPOs always having the IPO pop and everybody wants to get in on it, you want a couple of shares, you get it at, let's say, 40, you sell it at 70 or 80, and it's free money. There are a few things that are very different. First of all, the biggest IPOs this year. I saw a list of them yesterday. Some of the companies in it I've never even heard of, but of the 10 biggest IPOs this year, I think Robinhood makes it 10 for 10, that they're all down from their IPO price. So in a way, that's good that the speculative frenzy isn't being overdone right now. I think it was overdone with the the meme stocks, the SPACs, and when crypto went up to 67,000, Bitcoin rather went up to 67,000, and Dogecoin was up like what to 60, 70 cents. Now it's like 20 cents. That was a speculative fever, like incredible. It reminded me very much of what happened right before the tech wreck in 2000. If I told you that we're going to have a tech wreck in early 2000, you wouldn't have believed me because things were going so well. How could things go so well and then go so bad just like that? Like that, like the Iron Man snap in the Avengers movie, right? I am Iron Man. Okay. Nothing happened. Everything's okay. If you know what I'm talking about, reference to the Avengers. All right, so let's go back to that screen. All right, so Robinhood. So part of it is they gave about 20 to 30% of the IPO shares to their customers. And you could be thinking, well, it's the customers that make Robinhood work. And Robinhood is such a strong community. There was a time when if you knocked Robinhood on Twitter, or if I talked about it in any way that wasn't 100% glowing on my live stream, I would get I get some shit for it. I catch a little flack. People would at me. And to me, I don't hold anything against people who use Robinhood. It's fine if you use it. Just know that when something is free, you are the product. And you are the product because Robinhood came about to create orders, stock market trades, to sell them to market makers who will pay for those orders, payment for order flow. So if a stock is $20 bid and $20.04 offer, Robinhood will send that, and you buy 100 shares, Robinhood will send that trade to a company called Citadel, payment for order flow company. And Citadel will say, well, we'll give you, there's a spread of 4 cents between 20 cents and $20.04 a share. And Citadel will say to Robinhood, we'll give you a penny or two of that 4 cents if you send the order to us. Believe it or not, you know who started the payment for order flow? Bernie Madoff, who recently died in prison, who ran one of the biggest Ponzi schemes in history. He was actually credited with helping to create the NASDAQ stock market and build it into the powerhouse it is today by using this payment for order flow. That's right. And they were the biggest. Madoff Securities was like the powerhouse when it came to payment for order flow. Just about every firm in the street was sitting there buy and sell orders from their clients to Madoff Securities because every firm would get a little piece of that spread. And it used to be back in the 90s, spreads were a lot bigger than they are today. Ever since stocks were decimalized. Now, stocks used to trade like, let's say $20, $20 and an eighth, $20 and a quarter, 20 and a half, 20 and 3/8, 20 and 3/4. Now they trade at $20.03 or $20.04. So it's been decimalized. Okay. So I don't know if you know that little bit of history. I've been around a long time, over 30 years. It's a long time in the industry. Okay. By the way, Rhonda, I see, I'll just put that comment up here. I don't know why my mouse isn't moving. Oh, I know why, because I have to move it over here. Okay. No prob. Thank you very much. Namaste. Michael is out there. Michael, the easy money may still be there, but the yellow caution flag had to be out for a stock that had 75 pages of investor warnings. Yeah, that's right. I'll put the wow up now. Yeah. 75 pages. When you look at the warnings, the disclaimers, the disclosures in the Robinhood offering documents, it's pretty deep. Okay. And the biggest problem is if payment for order flow goes away, then Robinhood really isn't a fintech company, right? It's just another online brokerage. And online brokerages don't really carry such high valuations in terms of price to sales or price to earnings. Okay, so that's that. Hey, John, how are you, man? We definitely have to speak, you and I am looking forward to it. So that is what's going on with Robinhood. Now, is it the peak? I think it's apropos that Robinhood and Amazon are both down today. Amazon down in aftermarket trading because just maybe maybe the stock market is sending a signal in terms of Facebook going down. I know Google had a great number and the stock went up, but others went down. And I'm thinking that maybe this is as good as it gets. And to put that in perspective, when I say as good as it gets, we've had the earnings blow. The earnings have been spectacular. My thing yesterday, they said in the live stream, is if we do get a pullback in the market because earnings have been so strong and corporate America is so healthy, that my own opinion is if we do get a pullback, I think it'll be short and shallow. Just what I think, subject to change. But the more speculative part, SPAC, special purpose acquisition companies, and meme stocks, for example, I think that maybe either the risk appetite for this risky sector, the risky sector of the market, is waning, or that Robinhood investors are running into the realization that making money, on these areas, is more of the environment, not necessarily because novice traders with very little time as a trader are all of a sudden knowledgeable veteran traders. It takes a long ass time to become a good trader, and most people never get there. That's why most people start out aggressive, they trade, and then they realize that they're just better off being long-term investors, socking money away every month, every quarter, and never looking at their statements, right? Just let the money ride, invest in quality, broad diversification. Diversification, that's a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. Back to the share screen. Okay, so that's the deal with Robinhood. I do think there is some element of toppiness to the speculative, frothiest part of the market. That could be healthy for the market, or it could mean that the stock market is losing some energy. And if it's losing energy, then that eventually spreads to the bigger companies that were going up, like the top biggest FANG M stocks: Facebook, Apple, Amazon, NVIDIA, Google, Microsoft. FANG M. I didn't say Netflix. I said NVIDIA. I swapped out the N, if you recall. So I think NVIDIA is a more important company now than Netflix. I'm not saying there's anything wrong with Netflix. Hey, go Netflix and chill. It's awesome. Go. I'm not knocking. I get you. But I just think for my purposes, NVIDIA is like twice the size of Netflix. But I digress. So, and what I've been saying is, and I've been saying this for over a month now. If you're a watcher of the show, that as the more speculative areas lose energy, they start going down. People take their money out of those and they put it into the biggest companies that investors feel that they're most comfortable with. And then those mega cap stocks keep rising because of that. FANG M stocks. Apropos or similarly to the year 2000, right before the tech wreck, there was a lot of destruction in secondary and tertiary stocks. A lot of the IPOs were getting crushed, and money was going into the top, 10 or so largest tech stocks like Cisco, Microsoft, Intel, Dell. And then finally, when money ran out in those stocks, or they just couldn't quite live up to investor expectations anymore in terms of earnings and revenues, once those started going down, that was it. There were no more buyers, and the tech wreck is history, right? So that's what happened there, and that's what this situation has some echoes of. Okay, I don't want to get all negative on you. I'm just saying that that's what I saw. Okay, so let's get rid of that. Let's take it to Amazon. Pop myself back up on the screen. Hold on. Screen 4. I'm on screen 2. That's odd. All right. Oh, here we go. Thank you for working. All right. So Amazon, if you see this, I'll make this a little bigger so you can see it on your smartphone. All right. Amazon reported earnings of 1512, so way above expectations, but revenue came in light, 113 billion versus 115 billion expectations. But the guidance for the next quarter was a little bit light too. Now, ordinarily with numbers like this, you wouldn't really care, but we have to understand that Amazon has gone up so much. And just recently, the stock finally broke out of like a 3,100, 3,200 range and went to new highs. That if you didn't get anything better than absolute perfection, the stock would drop. Okay. So here is where Amazon is now. It's down almost $228 a share, down about 6% in aftermarket trading. I would definitely expect that to hit the market tomorrow. That should probably hit all the tech stocks and knock the Nasdaq down. Amazon is the third largest holding in the S&P 500 index. It represents about 4% of the S&P 500. By the way, you cannot invest directly into an index, but you could invest in a security that tracks or mimics an index. You see how I work that in there? And let's just take a quick look at this. Hopefully, you'll see what I'm seeing in about a second. All right, let's see if that works again. Nah, didn't work again. Okay, there we go. All right, that's better. I'll pop myself up in the corner. Look, this is the fun part of live stream use. You never know what's going to happen and when something's going to work or not work. Let me blow that up so you could see it. ETFs with the most Amazon is the ProShares Online Retail ETF with about 25% in Amazon stock. XLY, I follow that one every day. That's the big ETF that tracks the consumer discretionary sector of the stock market. That's 23.5% Amazon. ProShares Long Online Short Stores ETF, that's 22%. Fidelity MSCI Consumer Discretionary is 22% Amazon, and the Vanguard Consumer Discretionary ETF is 21.28% Amazon. Okay, so, but there are a ton of ETFs that have Amazon in that. It's just basically any technology, growth, consumer discretionary, general stock market, Russell 1000, NASDAQ 100, NDX 100, they all have Amazon. So let's see how it brings everything down. Dow climbed today 150 points. It touched an intraday record. So let's get to the big board over here. Okay. Whoopsie daisy. I want the big board. Why is it doing that? Okay. I'm going to have to play with my screen, but let's just go through here. Well, you don't need to see me in the picture for a second. Okay. But the Dow did touch an intraday record, but closed up 153. NASDAQ up a measly 15. S&P up a measly 18. Gold up a little, consistently trades around the $1,800, $1,900 mark. Oil rebounding a little bit. U.S. Treasury yield, 10-year Treasury yield up a little bit, 1.26%. The VIX continues to go lower. So that's the big thing of that I want to show you. U.S. GDP rose 6.5%. So GDP, I don't know if you heard this, but GDP for the second quarter, which ended June 30th, came out at 6.5%. It was a miss. It was expected to be a little over 8%. It didn't spook the market because a lot of that was because of an inventory drawdown, which means we have an inventory build to look forward to, which then would add to GDP. Plus, if you see Boeing, which has more impact on GDP than any other company, then that would also help lift GDP. And Boeing came out with a blowout number yesterday. They beat the street in earnings, revenues, airplane deliveries, and the stock was the winner of the day yesterday. Took off. No pun intended. So let's see what else we have here that we need to take a look at. Are you going back to the office if you're not vaccinated? A lot of companies, including the big tech companies, are saying if you're going back, you have to show proof that you were vaccinated. Wall Street employees, Citigroup tells workers, new mandate, mask up again. But a lot of employers are going to start requiring that you are vaxxed before you enter the premises. They're allowed to do it. And I don't think a lot of employers wanted to be the first one to say you have to be vaccinated to come back inside the office. But once you start seeing a few do it, it makes it easier for the next ones to do it. And before you know it, lots and lots of companies are saying you need to be vaxxed before you come back to the office, or maybe they'll allow you to work from home still, or wear a mask while you're in the building. So you're going to see a lot of that. I think it's going to be controversial, but that will creep up a lot. What else is out there? We looked at the ETFs. For what it's worth, I don't know if you follow Pinterest, but Pinterest is down over 17% in aftermarket trading. So that basically wraps it up. I do think the failure, let's call it that, of the Robinhood IPO, the bust is pretty significant. I think that it demonstrates a lack of high risk appetite. And if they were valued like a true brokerage company, like a Schwab or an E-Trade, it would have been valued a lot lower. So we'll see what happens. I appreciate your watching. I want to wish everybody a really nice weekend. You know, I don't do the show on Fridays, but I do send out a blast email if you want in on the action. Hit me with a DM with your email address. I'll make sure you get added to the list. I don't share my email list with anybody. I don't sell it. It is just for the business use of mine and for no one else. I will end this broadcast now, and I hope to see you next Monday. Thank you.